Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Wednesday edition of Benzinga's PreMarket Prep. Spencer Israel, Joel Elconin, and Dennis Dick. It is an earnings day again. The season is upon us. We have the continuation of the bank earnings that started yesterday. So we'll talk through earnings from Bank of America and Goldman Sachs. We also have a restructuring deal potentially in PG&E. We talked about that. Weak retail sales or holiday sales from Target weighing on the retail sector. Our guest today, David Trainer from New Constructs. He will give us 3 stocks that he's expecting will either strongly beat or strongly miss their earnings reports in the coming weeks. That'll be at 8:35. In the meantime, Joel, what's going on here in the overnight session?
We're down only a point here, Spencer, at 32.87. A little break overnight down to 77.75. That's right near yesterday's low. So let's keep an eye on that for any cue to some downside in this market. 32.75 was your Globex low from yesterday. Double close up here, folks. 88, that was your close from yesterday. 89.75, your all-time closing high for Monday. Let's clear that and take a poke at 3,300. Crude, 65 a little while ago. Down a nickel at 58.18. Gold in the green by 620 at 15.50.80. Silver, that's in the green too by 6.8 cents at 17.81. And don't look now, you Bitcoin bulls trading up. These are the futures, $105 at 8,855. Dennis is going to come in and give us his full fundamental analysis on Bitcoin.
And I will do that now.
Are you done?
I'm done.
Okay.
That was my fundamental analysis of Bitcoin because there's no fundamentals to analyze. So all we can give you is the technicals. And the technicals, bring the chart back up because I don't have crypto charts. So I got to look on the PreMarket Prep show chart. So let's look at these technicals here. Looking right now. Technicals look okay. It has that downtrend going. If we could draw our Jeff Mackey purple crown, you're starting to break out through 8,000. So you know what? Technicals look okay. I'll say 10,000 Bitcoin just on technicals.
Yep. Okay. Yep. We're trading up and, hats off to the CME. They stuck with their contract, their big old contract, their fully margin contract. And 2 days ago, it traded 13,500 contracts. And then it's the volumes coming in.
What do you mean it traded 13,000? Oh, 13,000 contracts.
Yeah.
Oh, yeah.
Yeah. And the open interest steadily climbing here. I wonder if Mr. Yusko is using the futures markets here to get in. But there's Bitcoin trying to get over 10K. We'll see when that happens. Good morning, Spencer. How are you?
I'm okay. I haven't asked either of you this yet, but have you or were you watching the Jeopardy Greatest of All Time tournament? Because if you didn't, it ended last night and you missed it.
Who won?
Ken Jennings won.
Ken Jennings beat the kid?
He beat James Holzhauer and Brad Ritter 2-1-0.
Wow.
He is the greatest.
I thought that kid was going to rock Ken Jennings. So Ken Jennings is still the best.
Ken is still the best, yes.
That's incredible. I guess he knew the Jeopardy button better. Because remember the kid said he wrote a book on how to, didn't he was the one that wrote the book on how to do the Jeopardy button?
He didn't write
he read the book.
There is a book about how to.
I guess Ken Jennings read the book too before he came back on.
Yeah, I mean, it was them two. Brad was a distant third, but they were going back and forth the entire time. It was awesome. It was great. Anyway,
those questions are so hard.
I usually get, like, if there's a hockey category, I usually sweep that category though, Joel.
There isn't.
There
it's
isn't.
really hard, man. These guys
wait.
Actually, there was a Wayne Gretzky question once. I got it.
There was a question last night. The Dow Jones hit an all-time low of 42 in this year, making it hard for the president seeking re-election.
Hit an all-time low of 42. What do you mean? I don't understand.
The Dow Jones Industrial Average hit an all-time low of like whatever the number was, 40, 42 in this year, which made it harder for the president seeking re-election. Or maybe the number I'm
Okay, whatever you've
the
done,
number
because
the
the
number
Dow
is way
Jones
off.
is not at 42.
Well,
No, Dennis, this is
I'm confused. This is why I don't do trivia.
the Dow
Joel,
Jones.
interpret this for me. I'm lost.
Okay, when do you think the Dow Jones was at like 42?
On what year? Was
yeah,
it at 42?
That's the question.
Like,
Well, that's
like not like 42,000, like 42.
Like Great Depression was really.
Like, yeah, like back in the 20s.
That's what I'm going for here.
I'll say, was there an election in 30?
That was my guess, but it was wrong. It was 1932.
1932.
Because there probably wasn't an election in 30. Yeah, FDR. Yeah, I was close.
You were on the right track. Dennis was nowhere.
I had no idea what you're
Dennis
talking
did
about.
not like that.
42. I mean, I see the Dow Jones trading up at 28,939. You say 42. I was like, are you just skipping all the handles here, like the 28,000 part?
No, I'm talking the Great Depression. Is what I'm talking.
Yeah, I know. Okay. No, I have no idea. That was a while before my time. I was even before Joel's time, actually. 1932.
Just by
Wasn't
a
it,
few
Joel?
years.
Were you alive in 1932?
33, actually 33.
You were born in 33. So it's just 1 year before Joel was born. There you go. Okay. Now that we've clarified that, let's get to the target. Target numbers. Target, lead the way to the downside.
Yeah, they were. Well, in a sense they were bad, but in a sense they weren't so bad. So the holiday sales for Target up 1.4%. Versus 5.7% in the same period last year, and their own estimate was 3 to 4%. So it was light both on a year-over-year basis and weaker than their own expectations. That being said, it wasn't so bad that they're lowering their guidance. They're actually maintaining their prior Q4 EPS guidance. So it was weaker than expected, but it wasn't so weak that they're going to have to revise their previously issued guidance. So it wasn't that bad.
Such a loved stock, and now it's on sale for 7% off. Just check out, let's just stop for a second. Look at the 5 below chart, FIVE, which was an epic disaster. And the stock trades down 23 points. What's it doing 2 days later? It gets 3/4 of the losses back. This is just the type of market. Stocks do not normally do this. It's very rare you will see a stock come out like 5 below and just completely do their mess in the bed and on their earnings, on their numbers. Obviously there wasn't a scheduled earnings report, but on their guidance. I'm just trying to bring it up here actually in the pro. Let me go grab it because I just want to talk about the fundamental numbers here for a second.
For 5 below?
Yeah, on 5 below. And I'm looking, and the comparable sales were down 2.6% over the holiday period. You can look at their guidance, it was lowered. Everything was pretty bad, and punished severely for it. Maybe a little bit too severely, obviously a little bit too severely. But here you are, the buy the dippers rule the day once again on 5 below, and the stock here it is 2 days later. And if you were buying it under $100, you're immediately up 15% or 14%, $114.26 close. It is down today because Target's bringing down every retailer, but that tells me that I'm not selling Target down $9. I'm not selling Target down $9 because it's just the kind of market that the stocks bounce back. Target is loved. Are you early? Could it go to 110, 111, 112? Maybe. And I have a little egg on my face. So I said I'd buy the Wells Fargo dip, and that one kept dipping yesterday. So the Wells Fargo quarter was really bad, but I don't know. I can't bring myself to just say, oh yeah, this is really bad, sell it, because I saw what happened with 5 below. So maybe they pull the rug out from under us and actually keep hitting this one down. But buy the dip has ruled for a long time, and I'm not coming in and selling the dip. I'm not going to start selling the dip because selling the dip typically does not work. Sometimes it does, but more often than not, it doesn't.
Were you at the screen when that came out, Dennis?
No, I was not. What time was that?
Boom.
It was well before I was awake.
Oh, really? Because, man, and this is, I love the pre-market, love after hours and stuff, but this is just one of these days where, like, if you were in front of your screen when it went through like that, we've been talking about that 122.50, 123 support. There was probably nothing.
Let's go
there.
Look at the tail of the tape.
Yeah,
and I don't
that
know
would
if you
have
can
been
show it.
one
I can
where
go look at it on my system here. I want to look at what I was doing this morning, and I'm just going to see what the prints were. So at 6:30, when these numbers came out, I'm going to Target. wrong stock. 6:30 when these numbers came out, the prints were okay. So it closed at 125.26. The earliest print was of size because it was 10 shares that trade at 124. I've got the earliest print at 122.77. So you had to hit it down $2.50 and you had to be on it within 11 seconds. And that was before there was even, that was, you'd have to be reading the press release, getting into it, finding the numbers, because there wasn't even, and like obviously it takes media a few seconds to read it and then republish what the prevailing stuff is from the press release. And then if you look at it, just trading 30 seconds later, it was down at 119 and then 118. And then a full 2 minutes later, it was 115. So, and you're talking about maybe 1,500 shares, 2,000, a lot of odd lots, maybe 2,000 shares trading in there. So you're not getting rich. It's not like you can go hit 10,000 shares and go collect $10,000. Not at all. And especially when they come out that early in the morning, there's just no liquidity. There's nothing in there.
Hey Spencer, we're getting people having problems watching this on iOS again. Were you able to research that all? And then I saw somebody saying they had problems getting it on their phone.
Yeah, I'm still looking into it. It appears to be a YouTube related issue, but I'm not quite sure why.
Okay.
If you're having problems, I recommend either trying the app or trying a different browser.
Working here.
Yeah.
Dennis, let me argue. I'm not going to argue. I'm just going to give you a point counterpoint on these stocks.
I like point counterpoint. Sure.
5 Below was in, a downtrend, right? And it had
kind of a no trend.
Yeah. Well, it peaked over what 150, and it was hanging out at 115 when it got hit.
Sure.
Right. 120.
Yeah.
So, the shorts got a windfall there when it, 121.23 was a close on Friday. You could scoop it up under 100 on Monday. Pretty big windfall here, right? Well, on the opposite hand, Target's been going up forever, right? This was started the year, over $100, had this big run up. It's doubled since 2019. So people are sitting on profits, right? And now it's gapping to a gap area. I would love to see this thing float back up into the 120 handle. Obviously not shorting it in the hole, but I just think that there's a different psychology in the stock. I mean, look at this monthly candle that you had when the stock went from 107 to 127.97. Very unusual move. So I think there's more natural sellers in this thing, maybe not down at the level that it's at. But I think the higher you go, the more sellers you're going to find in this.
I mean, and it's a good point you're making. Just consider this. Target was up over 100% in 2019. Is this the kind of stock that goes up 100% and doesn't have some, pullback? This is your pullback that you're getting. So is there room down 109, 110? Absolutely. Am I coming in selling down any stock down 7%? No, because again, this market just has this buy the dip mentality here. So I think it's a tricky one to trade. I'm probably just hands off, but I would be more prone to buy the dip as opposed to sell the dip. But maybe you can get it cheaper. Maybe you can get her down at 112. I could easily see this thing 111, 112. There's room there. 109, 110, I think you got some pretty hard support down there. Start get down there. That's where price is memory. That's where it hung out in October, November. That's where you definitely have probably some support down there. So you're a little early, like you were saying, even the gap. I heard you on the pre-market show. You really have a gap all the way down to 111.10. So if you want to fill the entire gap there, looking at the gap in the chart, what was that November?
Earnings.
That was actual earnings.
Yeah.
So you're creating like an island top here. So you come back down. If you fill that entire gap, the island top will be fulfilled. So I could see 111, and then you're going to create a gap and a gap. So it's always interesting.
Sympathy plays off this.
Walmart, direct Walmart, Costco as well. So look at Walmart down $2. This is all because of Target so significantly. And Costco, poor Costco, they absolutely blow it away on their holiday sales, up 9%. And I said I can't bring myself to buy it because I'm like, it's a thick stock, and this is the kind of stock that deserves to be up more, but for whatever reason they probably won't rally in, and they didn't. And now they hit it down $2 on the crappy Target numbers. So they blow it away, absolutely blow it away, and they really don't go anywhere. And then Target just a Target it doesn't do well at all, and they knock Costco down on it. So if I was buying any dip, it'd be in Costco. I don't know if down $1 isn't much, though. It's not much of a dip. Down at 290, I'd love Costco, from a technical basis, but
that was a very
Walmart
good call
too.
that
I
day.
mean, you're getting
Yep.
a dip in Walmart. We don't know. We haven't got any numbers from Walmart for the holiday sales yet, correct, Spencer? Unless I was away that day, I don't believe we've had Walmart numbers.
Nope, they're kind of the big ones that we haven't gotten yet.
So we'll wait. And do they report their holiday sales, or are they just going to wait for their earnings at the end in a month? I'm not sure if they even do it.
Honestly, don't. I would think if they haven't reported it at this point, I wouldn't hold my breath.
So Walmart's down. You let the dust settle. Maybe you let the dust settle and you don't trade these things. One thing I will say is Michael Polini in the chat there, is saying Kohl's is down on this. Kohl's already reported their number. So they're not going to get rocked. It's not like Kohl's going to go lose $2 or $3 on expectations that their sales are going to be bad. They already had their sales. So it traded a couple hundred shares down, or traded 45.90. It traded actually quite a bit of shares. It's already bid up at 46.12. So it's already starting to get some of those losses back. I mean, Macy's, same story. And this is not direct. The direct plays, when I think Target, I think of Walmart and I think of Costco. Kohl's is not, obviously Target does a lot of different things and not a direct competitor. Kohl's more comparable to the Macy's and the Nordstroms. That being said, this bar is set so low for Nordstrom now because, the Macy's was okay, but Kohl's was no good at all. Target's no good. I mean, everybody's Five Below was a disaster, and even though it bounced back. I mean, the retail, the bar is set so low for JWN. If they report holiday sales and they're anything okay, I think he can rally. So believe it or not, out of all these, if I want to own one right now, it's probably JWN. Maybe they really, don't do well either and they head it down again. But the bar is set really low for JWN.
I just don't understand these stocks because I wouldn't, like, I go to all these, if I go by these stores, I just don't know what I would buy like in any of them, and they all sell the same thing. And I don't know, like everyone just, I'm not going to Kohl's anymore. I'm going to Target. They're the tricky stocks to understand, but we'll see what happens. We got Costco. That was a great call on that day because it did rally up over 300. It is now trading below the level it was when it gave that great news. So keep an eye on, let's see, we're trading down. We're already off the pre-market low. So maybe if you're looking to pick that up on the cheap, that would be look at your pre-market low at 95.80. So let's call it 296. And once again, if you do go into rally mode on this one, can't say 300 exactly, 301. You have two highs at 30065, 301. I don't think those will come into play today.
No, because stock's trading down. I'd say what's more could come into play is the 296.80 double bottom. So if you look 296.66 on the 10th, and then 296, it's 296.66 on the 10th, and 296.80 on the January the 13th. Okay. So I would say that is more the number that I would lean on. You get down there in that 296 area, maybe it holds again. Although they'd say there's no such thing as a triple bottom. So that's the Target story. Should we go into the Goldman Sachs and the bank's earnings?
Yeah,
sure.
Let's go earnings here. Goldman Sachs. So technically, it was a mixed report. They missed on their earnings per share and beat on the sales, but we'll get to why they missed on their EPS in a second. Q4 EPS comes down to $4.69 versus a $5.46 estimate. So miss, like I said, sales beat 9.96 billion versus 8.51 billion. However, that earnings per share includes a $1.09 billion litigation charge.
Yeah.
If not for that charge, their earnings per share would have been in the mid to high $5 area. So they would have more than likely beat the estimate there. So what is now technically a mixed report really would have been a beat and a beat. And you're seeing, the stock trade this morning, but it's better than it looks is what I'm saying.
Yeah, and Goldman seems to always beat some of the expectations, and then they see, whoa, in the number. But again, those litigation charges, you should back those out because those are one-time event. Again, a little pullback here. It's had a little bit of a run. We've seen Goldman Sachs sell off on really good reports. This is, an okay report when you back that out. Not a great report if you don't back it out. So is it surprising it's down at $1.83? Not really. That being said, the banks have been tearing it up. The Wells Fargo did not bounce at all yesterday, but I guess I should have looked at that Wells Fargo quarter a little bit closer because it was really bad. When you're speaking the numbers, you don't really process them, but when you read it and say 93 cents versus $1.12, that was just a complete mess, even on an adjusted basis. So When I was saying a 50.5 yesterday, I guess I should have looked at the quarter closer because it's not surprising on numbers that bad that it would continue to leak. So maybe you get the Wells Fargo, maybe it gets down 47, 48, lots of support down there on that one. If it was to go down another $1, I'm not even trying to make a call. This is one of those curveballs, Joel. This Goldman Sachs. This could go anywhere. They could turn around, start buying again. They could continue to sell it off. There's no easy trade here, at least not from a technical basis.
No, I would, man, let's see. Man, you had, let's see what the closing high of the move is. And that comes in at yesterday's close at 45.66. You also had a close at 45.21. So let the dust settle here. I would use that as resistance now, a double close area at the high of the move. Of course, if you take that out, yesterday's high is quite a bit above that. But for them to prove to me that they like this Goldman report and the rally is going to continue, we're going to make a new all-time close, or not all-time closing high, but a new high on the move above 245.66.
Let's do Bank of America as well. BAC trade down just slightly. Give us those numbers, Mr. Israel.
This report was also mixed, but no such charge to sort of change how that one actually looks. 74-cent EPS versus a 68-cent estimate, so beat on the EPS, and a sales miss, 22.3 versus 22.35 billion. That's basically inline sales and an EPS beat.
I memean, Citigroup and JPMorgan did set the bar pretty high for all these stocks here yesterday. Obviously, Wells Fargo did not. So BAC 35.20 trading down.
Did you catch this one, Dennis? You might have. You had to catch. Did you see what this traded up to?
And here's, I just want to make a point here is sometimes I trade the headline numbers, but it's a really hard, this is not my bread and butter to come in and interpret the number in 0.5 milliseconds and then start trading on the headline numbers. I'm a sympathy trader. So when I see the Bank of America or, and this was difficult because you got Bank of America trading higher, on the initial numbers, then I'm looking, okay, what other banks can I buy? But you still have Goldman coming. So it's hard to really do that. Mm-hmm. But, in the case of Target, if I would have been awake this morning, I wouldn't have been trying to sell short Target. I would have been trying to sell short Walmart and Costco. So I've lost a lot of money trying to chase the leader, but I use the leader as an indicator to trade the laggards. And that's where my bread and butter is. So, when you're asking me what, was I awake to trade Bank of America? Even if I was awake, there's very little chance I would have been trading Bank of America on the initial numbers.
Do you know why I
would
said
have been
that,
doing the sympathy.
Do you know why? And I really
I don't know why you said that.
Because it went up to 36.
It got a little bit overdone. But how do you know? I mean, you look at it, you see a beat, and, you see what they did yesterday. I mean, yeah, it's probably something in the book there, too. So maybe it would have been a good spot, because once you get through a whole number and you haven't been up to 36 in Bank America, and
you did at the end of the year. You did at the end
36?
of 36. Yeah.
I don't see 36.
You said near it. I see
35.72, but you haven't been through 36.
Correct.
You haven't been through 36 in decades.
100 years.
100 years. What's the all-time high in Bank America?
Man, I used to trade this thing a lot.
This will be shocking to some people, because if you're newer to trading and you look at a 10-year chart, you're seeing this thing, you're like, oh, this is at all-time highs. Take this chart back before the financial crisis. This is significantly off all-time highs.
I was going to guess 55.
I'm guessing 70.
It was 55.
55?
55.08.
What year was that?
2006.
So if you bought this thing in 2006 and held for 14 years, you were still down 35% on your money. Buy and hold.
Yeah.
It was also when I stopped putting banks in my long-term portfolio after the financial crisis. I have a few banks. It's not entirely.
Could you name a couple of the banks, I know I've asked this before, that make up Bank of America?
Oh, that they came and bought during the financial crisis?
Oh, Merrill.
Yeah, Merrill's an obvious one.
But going a lot farther back than that.
Oh, they've just accumulated banks their whole time. Did they buy Wachovia during the financial crisis?
Did they buy?
Somebody bought Wachovia. What about
Did they buy?
Who was that lender? The crazy lender, Countrywide.
Countrywide, yeah.
They bought Countrywide too, didn't they?
Ooh.
All these stocks are basically going under, and the Fed made them come in and start scooping up these other companies just to save them. I think Bank of America bought Countrywide, but yeah, you forget who bought who, right? JPMorgan bought Bear Stearns to save them. It was a mess. I mean, you go back into that. If you're new to trading, that 2008, 2009 was incredible trading. And there was so many banks that were literally going on, and they let Lehman Brothers go under. And then they're like, we can never do that again because it was so much, everybody banking. There was so many repercussions from that. Like it basically was too big to fail, and then they failed it anyways, and then it was a complete mess. So they didn't let Bear Stearns go under. I don't believe they let Countrywide or Wachovia. There were so many banks that wanted to, basically go under though back in 2008, 2009. And I truly believe if the Fed wouldn't have came to the rescue, that we would have lost a pile more banks and, maybe almost all of them. It was a big mess. They bailed out Citi.
Alex, big guy tweeter. He must be as old as me. Nations Bank was
Bank. Is that the one you were thinking of?
Yeah, back in the 90s.
Oh, they bought so many banks.
And then,
that's why we got the big 5 or 6, right? Because there used to be a lot more banks, and they've, just slowly been. There's lots of regionals. There's still a lot of banks out there, but the big guns, a lot of them been scooped up. Remember JPMorgan Bank One? Yep. Bank One was a big one. ONE, remember trading that, Joel?
Yep.
That got scooped up. I think it's JPMorgan that bought those, and you get it all confused now. It's decades later, but I think.
And I think originally it might have started out as like the Bank of California, and then they bought Nations Bank and they went on a roll. But anyways, is there a new NB symbol? Because that was a good stock back in. Nope, no NB trade. Okay, so
and Spinner making a point is JPMorgan was one of the lone survivors. JPMorgan really is making new all-time highs. That's been the best of breed. Has Goldman hasn't made a new high yet, has it? No. Well, obviously, it hasn't even hit the highs from 2018. But where is the Goldman Sachs all-time high? Did it hit 300 ever? Goldman's come along. It's almost at all-time
275.31.
Oh, and that's recent. So that's the all-time high. So Goldman, Morgan Stanley, I believe, was 85. I'm just challenging my numbers. It's right out of my head. I remember an 85 in Morgan Stanley. Am I right?
Morgan Stanley
85,
91.31.
91. I was even higher than that. I remember seeing 85. So yeah. So all these banks, you bought these things the last 15 years, you're still down money, except in JPMorgan, which is just awesome. Jamie Dimon.
The Jamie Dimon. Remember when he bought the Jamie Dimon low? Remember when we talked about that?
Yeah, that's what turned the whole market around. He's like coming in buying stocks.
January of 2016. What did he buy?
Was it 2016?
Yeah.
They called it the Jamie Dimon bottom. I don't know. He came in and bought, or was bullish
or
something.
He came out and said he was bullish, and then he bought a bunch of shares of his own stock. And
can I take this away from the banks for a second? And I just want to bring up a stock that I don't know if I've ever talked about it on the show, but MNTA. I want to just say how ridiculous this market is now. So MNTA reports earnings yesterday, and they rally the stock, $5-6 here. A huge move, huge move. So then you have JPMorgan last night. This is a chasing upgrade. And they come out and they upgrade the stock because the stock's run up $5 and they put a price target of 30 on it. It's almost trading to 30 in one day. It doesn't mean it has to go there. You always say it doesn't have to go, it's not going to go there immediately. This one's going there immediately. And I don't know anything about this company. Maybe it goes 30, 40. I don't know where it's going, but I'm just saying you come out with an upgrade and you're going to price a thing right to the price. This is the only new information here this morning on MNTA is that it got an upgrade from JPMorgan and they put a price target of 30. So the market buys this thing up to $29.60. They already buy it up to basically the $30 price. Is that not ridiculous? Are upgrades worth that much now? Upgrade. And what I mean by chasing is they're doing an upgrade after the good news, chasing the price in essence.
The same thing there was a double catalyst for Tesla that one day because it had the price target raised from 385 to 615, and then Kramer was talking about it, and so that was the double whammy there. But you
see what I'm saying here? You always say
I know
on the
what you're
show,
saying.
When a stock gets upgraded, it doesn't mean it's going there right immediately. Well, this one did.
You yelled at me the other day for saying that.
So I always want to know is if this thing trades 30 today, does JPMorgan come out and downgrade it to neutral the next day because it already hit our price target 2 days later?
Spencer, did he yell at me the other day for saying that, or was that? Oh no, that was
No, it wasn't.
This is an example. I'm giving you credibility.
It was
because you
buybacks.
say it.
It was buybacks that I said.
This is an actual example of a stock that's trying to go there immediately. Is this not overdone? I don't know.
29.80.
Did it hit 29.80?
Yes.
Somebody just sees, oh, JPMorgan thinks going to 30. I can safely buy this thing up to 30 right now.
That is correct.
I mean, the stock's got momentum going. Who knows? You know, these things get momentum. It's stock's name is Momenta. So I guess the momentum is carrying Momenta. But wow, I actually saw this upgrade last night and I was like, I think I could have bought it at 26. And I was like, well, I'm not paying up, 65, 70 cents. Sure wish I would have. Holy mackerel. I not see this thing going to 29.80. Anyways, that's just my thoughts.
Let's just do real quick. The last of the notable earnings reports, I think, for us this morning will be UNH, just large company. They beat on the EPS, missed on the sales, and reaffirmed their guidance for the year. Not a big mover, but big company.
It can move though. $300. That's the line in the sand for this thing. You're at 291, and these things are wild. They can get wild on earnings, but we had a tick right on the kisser on December the 20th at 300. There's nothing more psychological than 300. So I'd say up in the upper 298, 299s, you got major resistance. Get through 300, it gets interesting. So upper 290s, I'm a seller until I could get through 300.
It's trading. Yeah, it's 290.51. So we're
not saying it's going to 300.
No.
Like people get confused and they say, "Oh, I said 300," and "Oh, I think it's going to 300." I'm just saying if it gets up there, there's major resistance up there. I have no idea if it's going up or down, but if it gets up to 297, 298, I'm more inclined to be a seller.
There's a couple other daily highs. It had a big fall. I'm not sure what the catalyst was on Monday for it to fall $10. But your high on Monday, you haven't even hit that yet. So if you want some intermediate targets ahead of that, 94.45 was your high on Monday, and then Friday. And then I'll even give a number ahead of that. You got a pair of highs at 297. Let's call it 297.29. That splits your highs from January 8th and 9th.
Our buddy JV Spec is also alerting us that not only is it big on the charts, it is big in the order book. UNH a 70,000 share offer at 300. Obviously, it takes some big bucks to push it through there. So you're backed up by some size at 300 as well.
Hey, did they chew through that Uber guy yesterday?
They did, right at the end of the day. Or did they? Uber guy traded 35.02, but that could have been on a different exchange. Did they chew through it? I don't have my book open. JV Spec, you're sitting right there. Has Uber still got that size, or did they chewed it up? I think that it's traded 35.02. You'd assume they shoot it up unless you got this fragmented market where it trades 100 shares through it somehow. Is there anything JV Spec on Uber at 35?
It's at
wait on that.
It's at 34.98 right now.
He says there's nothing there, so they did chew it up yesterday. I mean, they get up there, they chew the stuff up, so they can go through this. It's not impossible. It's always interesting when it gets right there though, and then it doesn't continue the party. So if you're bullish Uber, you want to see it back going through the $35.
Just for those, we talk about, the tractor beam, we talk about these big levels. If there's ever a warning, if it's late in the day like that and you're going into that size, that's probably like, that's probably like the worst.
The early start gets you through it sometimes.
Yep. But they had to
get the running start.
Yep. See if anybody reloads. JV Spec, he says 80,000 at 35.
Oh, so they have to come out. So a little bit. There's a little bit of reloading there. But I think he said yesterday, if I go to, I don't have my sheet in front of me, but I thought it was like a couple 100,000 shares. I remember it being big. JV Spec saying it. So they chewed some of it up anyways. A little bit of a reload. So keep that in mind. Uber is still 35 resistance until it gets through that 70,000 or that 80,000 shares.
All right, it is 8:35. I'd like to bring on our guest today. His name is David Trainer. He's the founder and CEO of New Constructs, and he's got for us a few stocks on his radar that he's looked at their historical earnings reports, and he's looked at what the stock has done and what their expectations are, and he has expectations that these companies are going to either strongly beat or strongly miss on their earnings. David, good morning.
Good morning. Thanks for having me, guys. Good to see you again.
Before we get into the stocks on your radar, I'd like if you can give us a quick refresher. You were on our show maybe a month or two ago. The research you're doing on new contracts. Explain the idea of like earnings distortion. Explain what that concept is.
Yeah, most people don't have time to read filings and comb through all the footnotes and find print and press releases, 10Ks and 10Qs, and we've developed technology to do that exactly as well as an analyst can do it. And we've been developing this technology for 17 years. Harvard Business School and MIT Sloan recently published a study showing that the technology produces better data than what is available in the marketplace from either CompuStat or the street. They do this fancy math to prove all that. And so we've got a research product that we make available that leverages the insights from the study. And we have what we call earnings distortion scores, which rank companies based on how likely they are to meet or beat or miss their earnings numbers based on how much noise has been in the earnings in the past. So for example, if we see a company that's got a bunch of unusual gains baked into their numbers, well, they've been overstating profits and they're more likely to miss going forward because analyst expectations are unduly elevated because of unusual or transitory items that have been artificially propping up the numbers. The reverse on the negative, right? If they've been baking in a bunch of unusual expenses, sort of filling the cookie jar, so to speak, and management has caused their earnings to be understated, well, then those companies are more likely to beat going forward.
I don't know if you've gotten a chance to look at the Goldman Sachs report today, but this is sort of what you're talking about. They had a massive legal charge related to the scandal going on in I believe in Malaysia right now. That sort of weighed heavily on the earnings per share. I don't know if you saw that, but this is sort of what you're talking about in action today.
Yeah, the MDB or something.
Right.
Yeah, that's a great example of an unusual expense. Now, there's two sort of key characteristics of that. Number one, it's very well known, right? And it's been telegraphed for a long time because they've been under investigation for that one. And so that in particular is not necessarily something that we would find to be as market moving as a lot of the stuff that we find buried in the footnotes. On top of that, the legal expenses and gains tend to be a little more predictive, in fact, right? Because they are so unusual. And they sometimes can have sort of a knock-on effect in terms of their indication around the width of a moat of a business. For Goldman Sachs and this one-time settlement, not so much of a big deal. But when Apple wins a big patent lawsuit and they get a gain from the settlement from via Samsung, that's an important number because it's noisy, number one, and it's not part of the normal operations. However, it does speak to the width of the moat around Apple's business in that, hey, we just got legal backing that Samsung is cheating and our product is better. So there's some interesting things you can do. We have 13 categories of these unusual items that we laid out for the professors at Harvard and MIT. And we're the first ever database to do that. So we got this earnings score and it's been really popular. We've been pretty accurate with it. Companies can manipulate earnings for a long time. And that's another thing that the study proves is that there is clear management bias as to the magnitude and regularity of disclosing items in the footnotes as opposed to on the income statement. So they're manipulating earnings on purpose. They're taking advantage of the fact that people don't read footnotes. But you never know when they're going to stop, right? So Enron had something like 350 people that they hired and paid to do nothing but bury data in the footnotes.
Right.
And so they could pull it off for a long time. So anyway, the good news is we're giving people a sense of how much risk there is in these earnings estimates.
So let's get to some of the stocks that you have on your radar. I want to start with Pfizer just because it's reporting the closest to today. Pfizer reports on the 28th before the market opens. Based on what Pfizer has previously reported and what they've included in their footnotes, what do you expect for Pfizer in terms of earnings and also just earnings distortion and what may or may not be there?
Yeah, we've got a strong miss rating on Pfizer. They've got some significant unusual items. We would call $5.3 billion in net earnings distortion, right? And that's overstated earnings by 5.3 billion over the last 12 months. Most of that comes from an $8.1 billion gain on the completion of the consumer healthcare joint venture with GlaxoSmithKline that was reported in the third quarter last year. That's partially offset by a $3.1 billion impairment charge. So at the end of the day, 5.3 billion, or about 33% of the trailing 12 months earnings. So that's a big number, and that's caused the earnings to be overstated. So we think that the consensus estimate of 57 cents a share is a little bit too high, and there's a good chance that they could actually miss that number because analysts haven't pulled those unusual gains out. They're looking at an overstated number in the past, and we don't know for how long Pfizer can continue to find one-time items to artificially prop up earnings.
So when you say you have a strong miss score on Pfizer, are you saying that you expect the company will miss the expectations, or are you saying that maybe they won't, but in reality, with all the footnotes, they will?
I'm saying this is the most this strong misses are sort of worst score. So we go strong miss, inline, beat, strong beat. And the likelihood of missing is very strong because of the level of unusual gains that have been propping up numbers.
Got it. All right, let's move on to Lam Research, LRCX. They report on the 20, I just had it, I believe around Pfizer actually, Lam Research. They report the 29th after the close. Let's look at LRCX. Tell us what you are seeing here.
We've got a beat score on these guys, so we think they're going to beat the number. This is a stock we've liked for a long time, and we've written on it multiple times. It's been a long idea. And what we found is that they got some 139 million in net earnings distortion that caused their numbers to be understated. In particular, 64 million and some tax adjustments. But overall, 89 cents a share of the trailing 12 months, or 7% of the reported earnings. And so we think that they have about a 13% increase that you would see naturally baked in, and the analyst earnings estimates are not quite that strong. And so the analyst estimates imply a 13% increase, whereas if you're looking at core earnings, you're really only looking at a 6% increase. So we think that there's a good chance these guys can beat because their earnings have been understated by unusual expenses. And we like the stock in general a lot as well. It's got really high returns on capital, and it's done really well for us in the last year or so.
And then last one I want to look at is Qualcomm here. They report on February 5th after the close. What are you seeing in Qualcomm based on prior reports and prior footnotes?
Yeah, earnings are understated. We got a strong beat score for these guys. And so 62% of reported earnings in distortion, right? So that's a pretty big number. Unusual expenses. And when we remove those items, we're showing that core earnings are more like 583 a share, well above the GAAP earnings of 360 on an annualized basis. So you got a business where the underlying strength is really strong. We had these guys as a strong beat last quarter, and sure enough, they beat in Q4, and the stock's up 13% since that prediction versus 9% for the S&P. And we think there's more to go in this business that's, had always had really strong underlying economics, but we know now that their technology has got some real staying power and the width around the moat here in terms of their ability to continue to create chips that make them important and often essential to cell phone manufacturers is sustainable. And so we think this is a good stock, and it's got nice near-term upside potential with a strong beat earnings distortion.
So you predict beat in Qualcomm or miss in Pfizer. Do you have any insight into how the stock historically reacts to past reports, and whether the move is justified in your opinion or whether it's not?
You mean Qualcomm in particular?
Or yeah, any of these names. I mean, do you have any thoughts or insights into how they've reacted to past reports?
Yeah, it's I heard you guys talking, I came on a little bit early, and some of these stocks, the way they react to a variety of announcements is a head scratcher. Qualcomm, we saw, on the news of beating the number, had a big jump, and it's since outperformed the S&P as well. And it kind of depends. Sometimes it's an outlook question too, so they can beat, but they can change their outlook, and that's going to affect things as well. There are a lot of factors around what happens on a conference call and around what's going on with the business outside of the pure earnings number.
Right.
But as you guys know, and we see on CNBC all day long, and we talk about earnings all the time, and we're in the middle of an earnings season. And typically, though, earnings beats or misses in the short term have big impacts on stock price movement. That's why we developed the score. In general, New Constructs is a very long-term oriented research product, but we've got this near-term indicator that helps really highlight how much risk there is in the near term because of quality of earnings.
And we've talked about it on our show, this market sentiment for the day, Trump's guidance in the report, which Trump's earnings in the report, and then there's the whole, you have to take into account the trend and if the stock has been running or gotten crushed, and there's a lot to take in. Dennis, did you have something?
There's a lot of considerations, obviously, and
Yeah.
I'm a trader who trades earnings. So, and I've obviously, looked at a lot of different things as well. And, a lot of times it's like, you got to be lucky enough to report on the right day too. I mean, if you get a day where the market is just getting killed and a company comes out and beats that day, well, there's a higher likelihood that there's not going to be as good of a response to it because, hey, they're just selling everything here right now. So I wonder if and I always wondered, and this maybe is, something for your firm to look into, if there's you can back out all those macro effects, and it'd be really hard to do. I don't even know how you'd go about it, but if you could back out and say, okay, well, the market was down 2% this day. This company reported pretty good numbers, but they probably got punished because they were throwing the baby out with the bathwater type deal. I mean, do you guys track anything like that, or is that something on your radar?
That's a great question, and the answer is, yes, we do, and we do all those things you said really just by looking at performance over a longer period of time. Over a longer period of time, that
Right.
stuff sort of evens out, and the underlying strength of the business, the underlying strength of core earnings, which we focus on doing, and the paper I mentioned demonstrates that we do significantly better than anyone else. That's what you need to focus on because, as you said, it's almost impossible to predict or to understand all the different things that can clutter a trading.
A lot of
day.
dynamics.
Exactly, Dennis. And so the only thing you can do, that you can sort of lay your head on your pillow at night and feel good with is due diligence on what the earnings power and the valuation of given stock is and its competitive position, and stay true to that, because I think the macro stuff, I mean, there's some really smart macro people, but it's just, given all the sentiment and all these things, like you said, it's just almost impossible to try and control for all those other factors. It makes a lot more sense to try to focus on what you can understand about one company.
David, I've got one more stock for you here, and it's a stock that I get a question about almost every day, Amazon. And when I'm looking at it, it hasn't participated in the recent rally, which is somewhat concerning to me. Somebody was asking me my thoughts on Amazon yesterday. I was like, well, I don't like the fact that this market's been going straight up and Amazon really hasn't been participating as much. So, maybe, it's a consolidation to go higher, but, then I think about, Spinner was making a good point in the chat. There's Shopify, there's some competition coming from there. What's your indicators just saying on Amazon?
Amazon has been a really interesting company for us for a long time, and it's especially since it's sort of been this purposely unprofitable kind of business. And I think there's a lot of power in this business model. Clearly, everyone talks about the Amazon effect. It's a popular topic. But when you look at the valuation or the sort of future earnings baked into the stock price, it's something like expected to be twice as profitable as Walmart. And so, Amazon has been a really popular stock over the years, but we think pretty much all the good news has been priced in for a while. And another thing that people miss is the balance sheet on Amazon has really grown a lot these days. And so free cash flow is not quite as good as what you're going to get from the operating cash flow on the cash flow statement or what the company's going to talk to you about, because they've done a bunch of off-balance sheet financing to grow out their cloud facilities. And so Amazon's definitely gotten profitable these days. It's got a return on invested capital of 13%. It's the highest it's been in about 10 or 12 years. But the expectations baked into the stock price are super high. And it's already priced to be significantly more profitable and larger than Walmart. Many people believe that that's probably going to happen, but as an investor, you got to ask yourself, how much more expensive can it get? How much more profitable can the expectations baked into the stock price be? Will it really take over the world? Because that's already almost priced in. So, risk reward there maybe not as good as people think.
All right, we've been talking with David Traynor, who's the founder and CEO of New Constructs. He's got a strong beat prediction for Qualcomm, an earnings beat prediction for Lam Research, and a strong miss prediction on Pfizer, looking at the nitty-gritty of these earnings reports. David, thanks so much for the time today, and have a good one.
Thanks for having me, guys. Enjoyed it.
All right.
Thanks,
8, that was good. I always get to the nitty-gritty of these reports. Look into the footnotes.
It matters. I mean, expectations, he's looking at stuff like that. That stuff matters.
Goldman Sachs today is a great example. There was a massive charge that is impacting their earnings. I mean, their bottom line. That's it. So there's more to, on this show, we talk about the headline numbers, we talk about the earnings per share, the revenue, but there's obviously more to it than that. Just for the sake of brevity, we can't get to every detail of every report. We asked on our show yesterday, we asked whether which short squeeze would last longer, Beyond Meat or Tesla. And we were
quickly answered.
We got an answer almost immediately.
The Beyond Meat was more impressive right off the hop, but short squeeze over, I would say. In my opinion, the short squeeze has ended in Beyond Meat. I think you're going to see, a little rally here and there. But even on decent news last night, the sellers came through and started selling. Check out the chart. This is my opinion, just my opinion. I have no position in it. Check out the chart on Rite Aid. When Rite Aid blasted off in orbit on that short squeeze there the other day, I had a question, when the stock was at 16 or 17. And I was like, I think it's over. I think the path of least resistance is lower. And here you are, and it's $12. I think Beyond Meat's the same story. Is it, going to get back to 120, 125? Potentially. I think those are selling opportunities here now. That is an ugly candle. You caught a lot of people chasing it yesterday. Imagine, you're like, okay, I can't take it anymore again, this Beyond Meat. Or even worse, I was short the Beyond Meat. I can't take it anymore. I have to cover. And you buy that open, and then you blow out at 134 or 135, and you watch the thing just fall $25. I mean, everybody who bought anything yesterday is down money. Anybody who's chasing it yesterday is down money. Anybody who shorted the thing and was covering yesterday is puking now because the stock's down another $6 on good news. In my opinion, I believe the Beyond Meat story, that was the short squeeze. I thought it had room when it was 80. I thought it could get to 100. I never in my lifetime thought it was going to get to 135 again. It was a gift. That was a gift in my opinion. And I think when we look at this stock in another month, I think it's back down to 80. That's my opinion.
It was
barring a takeover from McDonald's.
Well, that won't happen.
That's a joke.
Because I saw what happened at the open at 9:32, at 9:35, and then at 9:40, I was like, oh, you know what? All right, I'm gonna get down dirty just a little bit.
You were trading this.
And then I stepped away because every Tuesday at 9:45 we have an all hands meeting, and it goes like 20-25 minutes, and I like whip out my phone and I'm just scrolling through whatever, and I see Beyond Meat halted, and I was like, wait, what? And I pull up a chart, and all the gains from the morning were just gone.
Yeah, that's how quickly these things end. They end violently.
I was like, what did I miss? I've been gone for 2 minutes.
They end violently. When they end violently. And you saw the stock, and it halted not because of news, it halted because of volatility pause. It fell too much too fast. And some stocks it's 3%, some stocks it's 5%, some stocks it's 10%. A move in less than 5 minutes, they will halt the stock just to let buyers come in, or let cooler heads prevail when stocks are moving too quickly. So you actually had a volatility pause on BYND, which is done by the exchange.
Just funny how that works out.
That's circuit breaker system.
Yeah. I want to get to PCG here just for a second. They are trading up on a report from Bloomberg that they're nearing a deal with PIMCO and Elliott Management on a restructuring plan. We probably will not be hearing the last. This is not the last we'll hear of this, but good news, or at least that's what the market says for PCG this morning.
Saw this news last night. I didn't know how to interpret it. So it hit the tape. The press release comes out, and then they're saying, there is that potential for a settlement. Then they're saying it could be $5 billion. And it's like, okay, well, what does that mean? Does that mean there's money left over for the shareholders? Is that good, bad? whatever it is. You get Citigroup, they're chiming in though, and they're upgrading the stock here to a buy this morning, and they're raising their price target to 15. So they're in the analysts who know a lot more than I do about the fundamentals of this situation are saying it's a buy, and that's helping the stock this morning. So you could have bought it at 12 for a while there last night on this. I couldn't bring myself to because that's above my pay grade to try to interpret bankruptcy numbers and whether there's enough for shareholders, whether it's going to be interpreted as good or bad. So market, Citigroup is interpreting as good for now. It is trading higher, 12.59.
Two things here. One, if anyone's looking for a catalyst for the decline here, just another day in Israel as four rockets have been shot from the Gaza Strip. So that's a little bit reason for your decline here, geopolitical tensions, and looking at that 32.75 area, 75 and a quarter, that was the low for yesterday. That's a big number on the downside. Getting a couple questions here on Federal Express. But this news came out yesterday that Amazon lifted the ban on FedEx Ground for third-party shipments. I think what's interesting about this FDX chart is that was the gap from when they put it on, or was that earnings? Remember?
That was earnings.
It was earnings?
Yeah.
Okay. So
filled it. So buy the dip wins again. I mean, there's instances that buy the dip doesn't win, but it wins here again, Joel.
Yeah. So I don't know. I mean, if you're looking for continuation in this one, obviously you are trading higher by another 62 cents. A real nice two targets here. 164.78. That was the high on the day before it had the dip from earnings. So there's a good target for you. And then it really opens up after that to 68.37. I'm not sure if that's going to happen yet today. Got another big old gap to fill in this one, but 170, 114. That was a gap back from, I believe, another earnings report. So keeping an eye on shorter term target 164.78 here in Federal Express.
I'm still longing in the long-term portfolio.
Way to hang in there, Triple D.
Yeah, way to hang in there. I've watched myself go up 40 points, down, up, down, up, down. The yo-yo. This is turning me off of long-term investing. I'll tell you that much. Can't seem to get anywhere in this FedEx. Had it for a year, all over the place. Next.
We cover all the earnings.
Yeah. There's not much today. We didn't cover our organogram. It is propping up the pod stocks.
We should talk the pod stocks. Squeeze Central.
Yeah, OGI was after the close yesterday, and it was, or at least is being interpreted as a good report. Their Q1 sales, they doubled on a year-over-year basis. Net loss for the quarter, $863,000. That feels like it's getting smaller. And it is propping up the rest of the sector, most of the sector here.
Well, it's actually, they've started giving it back now too, though. Okay. So it was propping them up last night, and you had a continued short squeeze. And I mean, this Tilray, that's textbook short squeeze 101. They stopped squeezing Beyond Meat, and they said, we're going to start squeezing some of these pot names. And TLRY, impressive short squeeze yesterday. Is it over? I don't know. It's come back down from those highs. I'd say massive epic resistance at 25, but that's still 4 points higher than here. So hard to definitively say that this one's over. There's no red candle to talk about, so we don't know anything. Like, it's easier to say after the fact. I mean, same reason I was able to call Ray Day. It was like, okay, well, that's over. That's a candle that usually ends a short squeeze. Same thing with Beyond Meat yesterday, which is why I think it's over, because that's a candle that typically ends a short squeeze. We've not had that candle in Tilray here yet. I believe this is nothing but a short squeeze in TLRY. The pop-up in CGC probably similar, although I do like CGC better. We've always kind of said it's best of breed, and I still feel that way. But this is a big short squeeze. So you are not just seeing stocks, the Beyond Meat and the Tesla short squeezing. We talked about other ones. Pinterest yesterday, I believe, was a pretty good short squeeze as well. Not that the short interest is huge. It was a little bit of a breakout trade as well. Dan Nathan had said it the night before for a breakout trade. That is continuing here this morning. So when these stocks start going and breaking out, sometimes they can go for a bit, especially ones like Tilray that have a high short interest. So Tilray, classic short squeeze.
Hey, Goldman Sachs sells out of Uber. I wonder if that was their offer there at $35.
Where are you getting this headline?
CNBC.
Goldman
I have
Sachs
it on. I just had it on.
Uber. I didn't know they were in Uber.
Yeah. Maybe from the IPO.
Yeah, I was going to say maybe from the IPO.
Oh, okay. 35 Uber. That's your number.
That's interesting. Well, maybe
And Dennis, I know you can't talk about this stock much, but Peloton initiated overweight at Wedbush.
I have no comments. I got a trading position in.
Just saying. All right.
I'm not commenting.
One thing I want to mention, I should mention on the top, you can always give us a call throughout the day, during the show even, if you like, 734-494-0246. Leave us a voicemail. We'll take a listen and talk about your question on the air if time allows. So again, that's 734-494-0246. Or you can always hang out in our chats, both on YouTube and premarket.benzinga.com. That's where a lot of our listeners hang out during the show, and that's where we get a lot of questions during the show from there as well. I want to thank our guest today, David Trainer. Thanks to everyone in those chats for their participation. We always appreciate it. Catch our podcast or rewatch our show on youtube.com/BenzingaTV. And last thing, please remember that all the information from our show is meant to be used as informational purposes only and not for investing, trading, or even exercising advice. Everyone have a great
Good one, Spencer.
Thank you.
Made me laugh.
Have a great rest of your day. We'll be back with you on Thursday.